How's it going, everyone? So we're about to start this session. This is the first time that I've done a Thursday session. So pretty excited about this. On Thursdays, I want to do a lot of Elliott Wave stuff. So I want to get most of your guys' opinions on this too, if this is what you guys like to see, and then also where you want to take this from there. I am interested in hearing what pairs you guys want me to look at. We're going to start off by looking at EG as you see up here. I'm using my premium account right now, so you might not have access to everything I'm using, but I want to show you the full features of this once in a while. I normally use my free account during the session so that everyone has access to everything I'm showing. But so that's what I want to go over. So let's go ahead and get started. All right, so we're get started. So talking about Elliott Wave, today's session is going to be fairly basic for Elliott Wave. Hopefully you'll learn something even if you've done it before, but we're going to watch a video in just a little bit as well and just get a good sense of how it is. And then I'm going to show you guys a couple other things as well. So I've pulled up EUR-GBP. Because I've noticed that Euro pairs in general seem to work pretty well for Elliott Wave, and the pound EG is just a really good pair in general. Has a lot of good movements on this one, and a good risk to reward ratio based off the spread more typically. So usually the spread is really low and it moves a decent amount. So on the 8-hour chart, this is actually one of my favorite time frames to look at. Essentially, we see an impulse wave going up. So from the beginning of the impulse wave, I'll go ahead and remake this just so everyone can see how to do it. So when making an Elliott wave, there's two main parts to it. There's the impulse, which is the trend. So the trend is the overall direction that it's going, which in this case is up. And then the second part is the correction, which is where it goes down as well. So I'm going to go ahead and mark those up again. So we get you always start with the 0. So you just click there and it will be the 0. So it says it's the one that says 1 and a 5, but start with the 0. And you want to have this there, and I'm going to explain why I'm putting up these at these particular levels in a sec after the video. So we have this here, and this is essentially the main part of the Elliott wave. It's where market structure essentially goes up in waves, essentially 3 impulse waves and 2 corrective waves. And at the very top, we have an ABC correction after the 5-wave impulse. So the ABC correction, you can also find in the same tab. And then here, just the Elliott corrective wave. And you put the 0. There's also a 0 for the ABC. So the 0 goes where the 5 is. And then to determine where the A and the B is, it's just the first movements. And the A and the C can be on the same line, but normally the C is a little lower. In this case, if I get out the horizontal line tool and I make a line right here, we can see that they're on the same level. So this does qualify. There's also a double bottom, so that'd be a really good place to set up for a buy as well on that C. And as you can tell, it'd be very successful. Let's just take a look really quick on how much you would have made on this one. So with spread, you probably would have the best entry like around there. And just as a maximum, or you're just going to where the other 5 was, over the course of 127 days, you could have caught up to 882 pips. Pretty decent for this, just by using the double bottom, which I'm sure at least most of you already know how to do, along with the Elliott corrective wave as well for further impulse after the initial impulse. Okay, so that's the general premise of how Elliott Wave works. Now we're going to watch a quick video, and I'm going to explain the three rules of Elliott Waves and also the three tendencies as well. So let's go ahead and get that video going. This is on INVESTOPEDIA. Can you give me a 1 in the chat if you can see the full screen INVESTOPEDIA presents screen? Just give me a 1 in the chat. Let's see. Perfect. Okay. Awesome. Let's go ahead and run this.
The Elliott Wave Theory was developed in the late 1920s by Ralph Nelson Elliott. In his research, Mr. Elliott noticed repetitive patterns in the markets that he attributed to the psychology of the masses. He noted that similar repetitive patterns appeared in all different time frames. Elliott divided these large patterns into smaller patterns he termed waves. The ultimate success of this indicator rests on the trader's ability to divide price action into trends and corrections. Trends show the main direction that prices are headed, while corrections move against the trend. Elliott labeled these impulse and corrective waves. The Elliott Wave Theory is usually interpreted by a pattern of 5 waves that move in the direction of the main trend, followed by 3 corrective waves. This combination of 8 waves is called a 5-3 move and can be found on any chart regardless of the time frame. Interestingly, each wave in the cycle can be made up of other 5-3 formations of waves using shorter time periods, which can make identifying the current wave a difficult task. The high degree of subjectivity is the main reason why using this theory can be problematic for beginner traders. But by taking the time to figure out the wave count, Mr. Elliott concluded that the movement of the stock market could be accurately predicted.
Awesome. So I want to get you guys' initial opinions. Anyone have any opinions on that? Is that all review for you guys, or where is everyone currently at with that? Do you guys like these videos? Tuck loves Elliott Wave. Awesome. Yeah. So I just want to break down what he was saying a little bit more, just in case everyone didn't get all the full concept of what that video is about. So basically, the main ideas from the video that I got, at least, were that it was explaining how there is the impulse and the corrective wave, as I showed with the 5 wave and also the 3 wave, which is the ABC. And then also within these waves, there's smaller waves. So from the 2 to the 3, we might be able to determine that there could also be an Elliott wave on a smaller time frame within that. So I haven't checked this yet, but let's see. Actually, before we do that, I want to go over the rules of Elliott Wave, and then we can look and see if there's actually smaller Elliott waves in between the larger ones. So the rules are these. Yeah, here's the rules. Already printed out here, and I'm going to take a screenshot of this later, so don't worry about that, and I'll put it in the chat too. The inner count clear on wave 3. Awesome. And then, so yeah, here's the rules. I'll read them. It says, rule 1, wave 2 cannot retrace more than 100% of wave 1. So from the 1 to the 2 is wave 2, and all that's saying is essentially the 2 cannot be lower than here. This would not work for an Elliott wave. So anything above that does work. And then wave 3 can never be the shortest of the 3 impulse waves. And I didn't check that on this one, actually, but I think that works out. Let's make sure. So this is, oh wait, is this? Oh, whoops, yeah, of the impulse waves. So, and then wave 4 cannot overlap wave 1. So that was saying, we'll measure it later. Wave 4 is from here, and we don't want this one to be below the 1. This would not work because this would be below it. It can be at it, just similar to how we saw the A and the C at the same place. We just don't want to see it below. And then there's also three other things that we have as well. These are the guidelines. These are more tendencies in a sense. I'll actually put it down here so we can see both at the same time. Okay, so guideline 1 is when wave 3 is the longest impulse wave, wave 5 will approximately equal wave 1. Who understands what that means? Does everyone understand what this is saying with guideline 1? Basically, what it's saying is the third one. Awesome. So this so it goes 1, 2, 3. So this one here, this is the third one. This one, when it's the longest, it this from here to here generally equals from here to here. That's what guideline 1 is saying. Guideline 2 is the forms of wave 2 from here to here will alternate. If wave 2 is from here to here is the second wave, and here to here is the fourth wave. If wave 2 is a sharp correction, then wave 4 will have a flat correction, and then vice versa as well. So on this one, we see that wave 2 is pretty flat, and then wave 4 is very steep. So this does follow guideline 2 as well. And then the last one is after the 5-wave impulse correction, ABC will usually end in an area of prior wave 4 low. So here's wave 4. A and C are both barely below that 4. So that also checks out. All three guidelines and all three rules are appropriated in this example here. So I'm going to screenshot this and put it in the chat as a good example of Elliott wave, and I'll put it on. I'm going to put it on my Slack channel as well, just so everyone can see. Of course. So these are really the fundamental basics of Elliott wave, and now I want to go over some other things as well. So there's something else special happening in 15 minutes. Who knows what's happening in 15 minutes? It's not related to Elliott wave at all, and it's not the hour close. It's something else. It's not news related. New day, correct. Yes, both of you are correct. So at 3 o'clock local time in Arizona, there is a new day until daylight savings time. After daylight savings times in Arizona, it's at 2. And because Arizona doesn't participate in that kind of thing. So, so in 15 minutes from now, we're going to see a new day. And I really want to go over what happens with swap fees as well. How does everyone feel on the basics of Elliott wave so far? Does everyone like this? Does everyone want me to continue this in future sessions, or of course we'll go more deep in the next one? But this is the primary idea of what is more to gauge engagement first before doing an entire session on it. We need Elliott wave back in blue cap. Okay. Yeah. So my next one on my next session, probably on Tuesday, I'm thinking, will probably be an Elliott wave one, or maybe I might wait till next Thursday, but I'm going to reserve the Monday session for the other strategy that I've been doing as well, which is the week strategy, the week-long strategy. Elliott wave for trade room. I like that. Yeah, so I'll definitely be doing some more Elliott waves in the future as well.